I'm Frank Pichler, co-founder of FundOps Partners and fund manager.
I'm Ted Head, co-founder of FundOps Partners, and I'm head of fund operations.
FundOps Partners was founded on the idea that a lot of new emerging fund operators do not understand the intricacies of setting up a fund, managing the fund, and capital raising for the fund. So my partner Ted and I decided to work as consultants for fund operators to help them manage funds effortlessly and also help them capital raise.
When Frank and I started FundOps Partners, we looked at an opportunity to be able to work with emerging fund managers and fund operators that want to be able to grow their business but don't want to get stuck in the day-to-day. So we'll support someone who's got a napkin idea to be able to start a fund for a particular asset and then be able to manage everything from the legal, the fund administration, all the way through capital raising for them to allow them more time to be able to spend on acquiring new assets and growing their business.
So definitely fund operators should definitely bring us in as early as they can. We'd like to work with emerging fund operators so that from the very beginning we can help them structure the fund and then set up the processes and systems they need in order to then move forward into capital raising and management of the fund. But oftentimes there are fund operators that find themselves stuck in a bad situation after they've already started. We also have the ability to come in and help those folks straighten the ship and get them back on the right path.
When we look at starting something for a fund operator who has an idea about what they want to accomplish, that's the best time for us to come in and be able to work with them. We can whiteboard out the whole idea of the fund structure, and we can get the legal set up and all of the nuances of the day-to-day operations, including CRMs, investor portals, all the fund administration. But we can also come and work with fund operators who have started and have found out that they need the assistance on that day-to-day, and that way we can take over and allow them to grow that asset class that they need to continue to grow their business.
I think the biggest mistake that fund operators, especially emerging fund operators, run into is they don't understand the compliance aspect. The legal and the structure of the fund is the most important foundation in order to move forward and be successful in the fund business. And I think the second thing that they run into is they don't understand how hard it is to raise the capital and then manage the assets without having a partner like FundOps Partners to help them with the day-to-day management.
When operators begin their own fund and try to do everything in the entire process, they're going to run into issues where they don't have a proper CRM. They might not have the right investor portal. Or when they start bringing investors in, how do they manage those investors? How do they continue the conversation with them? And a lot of them can take time to be able to, smooth through the process of that investment. Not, everyone that they're going after, they may not know, because we work with 506C, which allows you to go out to people that you don't know through marketing efforts and going through different lists or different trade events. So those take more time than if you're trying to capital raise from friends and family. Those might be easy, but you still have to manage those ongoing. Once we set up the fund structure for operators and we have the PPM written, we have all the legal documents, then what we need to do is set up a CRM and an investor portal. Those are the two key things that make things run smoothly through the entire process. So by setting up a CRM, you've got that full control over all of the leads, all of the communication, and all of the process as you're trying to grow that investment opportunity with new LPs. Also with the investor portal, that allows them to go in and be able to see all the documents that they're about to sign that are part of the fund. So they'll see the PPM, they'll see that. So having those two key pieces, a lot of operators will start with a spreadsheet or in their brain, and that doesn't equate once you start getting more and more investors or you've talked to so many people across the board. Once you get into those investors where they brought money into the fund, a big part of that now becomes the fund administration. So how do you process their distributions? How do you process the K-1s when it comes to tax time? FundOps Partners handles all of that from a day-to-day standpoint, working with marketing, working with lead generation, working with the fund administration and all the tax and accounting processes. And that takes that off the operator so that they can, again, continue to grow their assets.
From a fund manager standpoint, the biggest operational task that we're involved with is number one, investor relations. We want to make sure that the investors are coming into the platform with the right knowledge and the right understandings, as well as, as stuff as little as they need a new password for the portal, or they need to know a little bit more about the properties that we're going to be acquiring. So from the fund manager standpoint, by far and away, operationally, investor relations is my biggest role. Maybe you could tell folks a little bit about why emerging fund managers as well as seasoned ones find themselves in the weeds operationally, and what does FundOps do to kind of help them circumvent that?
Yeah, we've seen a lot of different people throughout our lives that have an idea that they want to go do, whether it be a regular business that, outside, or within the fund as well. So it's a great concept. I want to start a fund, and I want to do everything and grow it and buy my assets and do all those different things. But once they start to get involved, the assets are really a very important part of that growth, because the investors want to be able to see the growth. They want to see multiple assets. They want to see where their returns are coming from. And so if they can't focus on that because they're stuck doing that, the phone calls to the investors, potential investors, they're working with the CRM, or they're working with the fund administration team, they haven't built a lot of internal people to be able to do that. Usually it's going to be the main fund operators, which is one or two people, and maybe some ancillary individuals. Until they've grown and gotten bigger and they hire an entire internal team, then they can't get stuck in those weeds to be able to do all those different items.
Do you feel like a lot of them get overwhelmed with that operational side and then lose track of the acquisition side?
Yeah, we at FundOps Partners, of course, have seen where we've started a fund from that napkin concept, if you will, and be able to set it up, and it's a smooth process because we set the stage for the operator to let them know that, here, you focus on the growth and we'll focus on the day-to-day. But we've also worked with those that have started a fund on their own and have gotten to that sticking point. They reach out and say, okay, I can't do this all day long every day. I need to go focus on something else. So it's a little bit more difficult. So we can come in and be able to assist with that. We review everything with them, make sure it was set up appropriately, but also fix all the things, get them out of a spreadsheet that they were doing where they're keeping all their investors on, and trying to just have a regular accounting person figure out the K1s and how to do distributions. We kind of pull in that more professional, fund-specific type of services where we can manage those day-to-day for them. So Frank, when we're talking to potential clients and trying to figure out how we can help them with their fund idea, what's some of the first things that we need to look at when we're first initially talking with them?
So one of the things that I think is the biggest box to check right off the bat is, what is the fund based off of? If it's going to be a very regular run-of-the-mill type of fund, there's 1,000 of them out there, it's probably not something that we want to get involved with, but we would really like to do something with unique and diversified type of funds and asset classes, something that separates people from the rest of those investment opportunities that they see every day.
So, you and I have come from working with different asset classes, but including multifamily. What we're looking for to be able to assist, how is it different from, let's just use multifamily as an example, that you see every day? How are we looking for different type of assets?
So I would say in multifamily specifically, right, we would want to do something with a much larger breadth of asset class interest, right? So we're going to be looking at either bigger properties, portfolios of properties, things that are going to generate enough cash to outperform the competitors that we have in this market. We're going to look for creative ways to exit those different asset acquisitions that we have, so that it separates us, so that we're not stuck in a swamp of 1,000 other guys asking for the same investment dollar.
When they have a purpose or they have an idea of what they want to do that kind of has a different vision than the standard that could be out there, what are we looking for them?
So I think you nailed it. Purpose driven is really what we're looking for. We have done many funds in many different asset classes, but all of them have one thing in common. They're either trying to create generational wealth for their family and for the future part of their family, or they're looking to help the community in some way. They're looking to make their community better or provide a service that is not currently available for them. So any kind of way that we can get into a fund structure that helps people or helps these families and these fund operators increase what they're trying to do is something that we're very interested in.
Yeah, so it's a vision that they have, but also something that is going to look at the potential investors as well as what they're trying to grow in the community.
Well, of course, anytime you're structuring a fund, investors are your foremost thought, right? We want to make sure that the investors are treated fairly and equitably, and they're going to have an opportunity to make substantial returns. But certainly the basis of why we take on a client has to do with what that fund operator's intentions are.
So when it comes to that potential investor, so if we're working with a family office or a pension fund or a wealth management group, anything like that, what are they typically looking for that's different from those standard same old funds that are out there?
So I guess it depends on the typical entity that you're talking about, right? But all of them, I would say, are looking for some kind of way to increase. They represent either a family that they are a family office of, or as pension funds, the pensioners that are involved in the fund. So their sole operation is to make sure they're increasing wealth for those participants. And that's our job, to make sure that they're getting that kind of return that they deserve and need. So when we're talking to fund operators and you're telling them that FundOps is going to take away the minutia of the operational side of it, can you explain that a little bit more?
Definitely. So, it of course starts with the fund structure that we help them work with. It helps with the legal that we manage for them and get all that done. But when the legal documentation is done, it's time for that fund to launch and get going. There's a lot of things that have to happen throughout that day, throughout every single day in the fund while that capital raise is happening. So you've got, the CRM that we manage, and be able to put those potential investors or those contacts, all those people that we want to call. So there's a full tracking of all the information about where they are in the stage, how much is the potential investment, or how many times do we need to call them back to follow up, because follow-up is huge. If you're not following up, you don't remember who you've tried to contact and call, then everything just kind of falls away. So that's where a lot of fund operators will start with a spreadsheet or something in their brain that says, I remember that I called Joe, Betty, and Bob, but I forgot what they wanted to do. So that's a huge part of that day-to-day. But beyond that, once they start getting closer to that investment, all the documents that we help create are in the investor portal. Well, the investor portal itself has the opportunity to show them and walk them through all those documents. That's part of that day-to-day as well. So every single new investor and potential investor then starts going into that fund investor portal to be able to show them those documents. We walk them through that. We walk them through the signature process so they know exactly what they're reading. If they don't understand or have questions about the documents, we'll help them understand those and answer those questions with them. And then once they become investors, then of course that continues. Then there's fund administration. Well, fund administration is all that tax and accounting and all those different processes. So we try to work with fund operators who look at how are we going to do quarterly distribution and profit payments from the assets. And so we help manage that process through the fund administration to make sure that all of the waterfalls are proper, all those profits are shown, and that we communicate with them. And even from that, I mean, as we've done many, many times, we'll go through and we'll do a video quarterly update for the investors to tell them all about the profits, all about those distributions, what the status of any upgrades to the properties are happening. So we handle that as well. And then as we continue, even beyond the full capital raise for that fund, we continue on to do those investor relations, and we help them, each and every year through the life of the asset to be able to do that fund administration, their K-1s that they need at tax time. We talk about bonus depreciation if that exists. All those different questions they have that can, really tie down a fund operator as they're trying to grow their asset class.
So you and I have done this many, many times. So to us, it's a walk down a familiar street, right?
Yep.
But just from what you described, I bet there's a lot of people out there whose eyes are spinning. Is it fair to say that we act as almost like counselors at some point to try to help people kind of calm down and focus on the task at hand? Like initially, like we talked about, the legal side of it, we got to structure the fund, we've got to structure the returns, we've got to structure the time horizon. You got to kind of give it, an elephant one bite at a time to these folks. Is that a fair statement?
I mean, you and I know we've talked some people off walls before, so because they start to get stressed. But if we, when we bring up what all those different steps are that are truly required, I mean, you can run a fund without some of them, but the requirement and the ease of use and the the compliance side of all of that, which is huge in what we do as well, they can just forget or not even know a lot of that. So as advisors, that's a huge part of our role. We're not just advising the fund operators, we're advising the potential LPs, those investors that are coming in, because they're not always as savvy as they would hope to be. They'll have questions. So we're advising, we're counseling and consulting all of the different sides of that investment.
To also help them kind of digest and walk through the operational side, do you think it's an advantage working with FundOps Partners in that we have trusted and true partners that we've done many funds with, from marketing teams that we know very well to fund administration teams that we know well, CRM teams we know well. We kind of bring a template package that can be customized for that operator. Is that a fair statement?
We spent a lot of years making relationships in the industry itself, through those ones that you mentioned, from the legal teams, the marketing teams, and the fund administration and investor portals and all of that. It makes it so much easier to be able to have that relationship, get that status with everybody. We've had funds that we've worked with that have started with this, that, or the other, including different fund administration or investor portals, because they heard about it. They didn't do a lot of research. Someone told them about something. If it works, that's awesome. But to have a seamless process all the way through, that's kind of the beauty of what FundOps Partners does. We bring together a package that it's not just cut and paste. It's actually relationships that have been built, grown, and just really solidified across the board to be able to help that fund.
I think you could probably agree that in all the funds we've been part of, there's typically two types of operators. There's the operator that just wants us to handle it and just do a weekly report to them, or maybe ancillary questions here and there. And then there's the other ones that wants to be more hands-on. Is it fair that FundOps can handle either one of those types of operators?
Yeah, and we can tailor the discussions. We can tailor everything for however they want to see it. So if they want to be involved in a lot of the setup calls and involved in those future conversations, so that they are a little bit more in that know, that's great, because we're not going to hide anything from any operator. We want them to be fully vested in what we're doing for their growth. But we also have to, again, as advisors and counselors, keep them from trying to pull themselves back into that weed pit. We want to keep them, focusing on what they need to focus on, but keep them informed, keep them as a part of it. Examples would be, investors specifically. If an investor wants to have a comfort level, I want to invest in this fund, but you guys are great, you've given me a lot of information, but I want to talk to an operator because I want to know a little bit more. Or that operator might have a little nugget that's going to really solidify because of what they know about that property or that asset class. We bring them in all the time. We're not going to keep that separated, because that shows that we are a cohesive team across the board in what we do. We're there for the operator. We're there for the investor as well. So we actually try to bring that all together as needed.
So from an operations standpoint, I can certainly speak from my side, from the fund management standpoint, but from the operations standpoint, do you believe that transparency to the investor is one of the hallmarks of a fund structure?
It has to be. I mean, you have to be comfortable in bringing us on to be able to know what we're doing, why we're doing it, and the entire process. And that's where our transparency, our reporting, our information has to be complete and full on a regular basis. So when we talk to operators, I mean, again, we're going to have some that are just at a napkin drawing, some that have already started, or some that might be setting up a second fund and found all the pitfalls and problems. What is the optimum time, and can we help at any stage?
So we certainly can help at any stage, but I think as an emerging fund manager, you would want us there from the very beginning. So before you go to legal, before you structure the fund, before you structure how you're going to return investment dollars back to the investors, we should be there setting up the systems, processes, and everything like that, and helping with legal and the structure of the fund. So that would be optimal for an emerging one. But if you're an existing fund manager and you've run into some weeds and you're having trouble, as soon as you can and you realize that you're above your heads, that would be the time to bring us in, because that gives us time to straighten things out and put as little disruption into the fund as possible. Of course, as you can guess, If there are several investors in the fund and then we have to change the fund structure, it's a much more, you know, arduous journey than it is if there are no investors and we're just redoing some paperwork.
So we've met people that have actually run a fund through a full capital raise, maybe a 5, 10 million, potentially even $20 million raise that they've done, that they started, they had the right people in their network at the time to be able to bring it in, and they said, okay, we did okay, we raised good money and we bought some assets. We want to do the second fund, but now we want to do a $50, $100 million fund. There's going to be a lot more to that, right? So what do we do, and how do we counsel that Fund 2 operator and what we could do to help them and help them grow?
So in my experience, I've done 37 funds, and when I run into that type of situation, almost every time the fund operator that raised that $5 to $20 million initial fund and now wants to go into the big leagues, 100, 200 million, that kind of thing, one of the things they always say is, I had no idea how hard it is to raise this money. And I think one of the things we bring to the table, and you mentioned it earlier, is our relationships in the industry with service providers like marketing teams and like portal providers and CRM providers. We take a lot of that decision making out of their hands, and because we have that kind of prefab template where we can customize it for each fund operator. But at the same time, if you're going to scale up into a $100 or $200 million fund, it's a much different operation than a $20 million friends and family fund. So I think our relationships play a critical role in that growth.
What does FundOps Partners offer as far as, okay, I did that first fund, I knew a bunch of people, they invested in it, it was awesome, but now how am I going to go raise $100 million? What does FundOps Partners bring to the table that we can actually help them scale now?
So again, it's our relationships. Not only do we have them as service providers and vendors, but also network of different entities like institutional money. There's also ultra high net worth groups that we know of and are part of. So I think that's another thing that helps them. They don't have to go out and rediscover the people that we've already met and that we know. And when you're talking about an institutional type entity like a family office or a pension fund or any of those larger money kind of groups, it is hard to break into those guys. And so FundOps Partners has already done the hard work and kind of laid the runway. So they're always interested in taking our call because we do have purpose-driven funds that are different from what they're seeing every other day from all the other people, pitching their deals.
So if that fund operator who started in that $5 to $20 million range, they did a trade show here or there, they made some connections, but then they found out that they're meeting a family office or a high net worth or a pension fund. What's happened in that conversation that's different when we go to $100 million?
Well, first of all, the best thing they ever did was start the second fund, right? Because those kind of people that you're going to be talking about are going to want to see either a track record or know that you're not a one-trick pony. You're not just going to do one fund and then collect all the money and then run away, right? They want to have a partner so that they can keep reinvesting. A lot of these big entities, they have trouble placing all this money. It sounds crazy, but they're trying to get money out onto the street as fast as they can, and they need somebody that can perpetually give them opportunities. So you're creating a relationship not only through a financial gain, but also through the ability of them to be able to send some money out onto the street and start earning.
So they met a high net worth investment group somehow, and they were coming in at a $15 million fund, and these people have much more money to deploy, and they walk by and they say, that's cute, I need to find something for more money. Typically, what's the mindset of an operator right then? Do they think, oh, I can do that later with them, or do they say, okay, I'm never going to get that guy?
So I think a lot of them that don't work with us would probably say, I'm just never going to get that guy. And I think that's a downfall of a lot of emerging fund operators or even second or third tier operators where they're not asking for enough money. And that's really the problem. They think in their minds, if I ask for a little amount, I can raise it very quickly. And the truth of it is, the more you're asking for, the more quickly you'll probably fill it. Because again, these entities need to put money out there working and earning new money, right? So they want to deploy as much money as they can as quickly as they can.
So you think that the years of relationships that FundOps Partners has built has been able to help, so as they scale, we are able to help get that money deployed into their fund?
Absolutely, and I think that one of the things that we do in our process, you and I, with new operators, is we assess where they are in our network, right? So, are they ready to talk to these guys, or should we pretty much focus on these types of folks and call our list from these guys because we know these guys can act on this fund because of the size of it, because of the asset class, or whatever it is. So not only can we help them get inroads into those groups that they probably wouldn't be able to do quickly themselves, but also target them into a certain group that makes it more, target rich and more advantageous for them.
Frank, we talked about purpose-driven funds. I mean, what does that mean, and what can we do to be able to position that type of fund, specifically so that when we're talking to potential investors, why is it unique? What's different about that that actually is going to entice them to come in and potentially invest with us?
So I think from all the experience that we both have in the fund world, um, the very first thing that helps us is having the purpose driven or the some kind of unique story to tell, whether it's through return structure or asset class or what the purpose of the fund itself is to help the community or whatever it is. So that's the very beginning of it. But then how we approach those different investors and those different entities about telling the story about how these guys became masters of this asset class, or why they became interested in pursuing a fund structure, that's the story that people want to hear because they want to understand what's the motivation. If it's just about money, then there's not a lot of interest in that. But if you're there to, again, create generational wealth for your family, or you're there to create new community offerings that don't exist now, or improve the community that you live in, those things are taken to heart by investors and entities for that matter. And that goes a long way to differentiating you from the other fund operators.
We've been to several trade shows where, a lot of people are presenting their fund opportunity. And, when someone comes up to talk with us about what offerings that we have, certainly that emotional aspect will always play into it. They want to make money for their entities that they're working with, whether it be their family offices or their pensioners, all that type of stuff. So what have you seen when we've talked to some of those potential investor groups that have come in, when we start talking about that, that emotional side of why that fund is there?
It's a good question. So, everybody's different. You never know who you're talking to, but I will give you an example from one of the funds we represent is an RV resort fund. And you would be surprised at all the people that we talk to that say, oh, my wife and I RV, or my brother and his wife RV, and we've been to lots of different RV parks, and that's something that's really interesting. And we've always thought this is a great investment opportunity. We just didn't know how to do it. And I think there's also those people you talk to where we have a fund that's creating the generational wealth factor, right? And they really like the story of somebody quitting, selling his company, and starting a fund to do a certain, whatever it is, asset class, to then create something that his children and their children's children can then be part of and can manage themselves.
So what's the weight between that potential investor group coming in and saying, okay, they're always going to say, what's in it for us first? Where are my returns going to be? And then adding to that emotional, purpose-driven fund, does it seem to ease up their mindset when they're going into looking at it?
So, this isn't a soap opera, right? So money is always the first question, right? They want to make sure that you have a structure that's going to provide them the incentive wealth that they can gain from investing with you, right? But what always helps is telling them about what's the purpose behind driving all this value and all this investment dollar increase. If you're just doing it to sweep the table and put it all back in your pocket, nobody's really interested in that. But if they can make money and do something good at the same time, it kind of settles both sides of people's humanity, right?
Yeah.
They want to do the right thing, but they want to make money. So you can give them both.
Again, some of the same old funds that are out there, it's all about the fee structure. A fund needs to, pay for itself in some way. We've dealt with funds that basically don't want to do any clawback of fees because they have the financial wherewithal to support that. But there are fees. When we're talking to a fund operator and doing the fund structure and keeping in mind the network that we know and that we work with, what's key in how we work with that fund operator to be able to talk about that fee structure?
So the fee structure is always very important, right? Because what people do not want to do is invest money just to have it spent on ancillary stuff. Like, you do not want the sponsors going out and buying Land Rovers, right? They want to know that this money is for the purpose of investing in these asset classes, and the only money that's actually coming out of the fund is to operate the fund. And I think one of the things that we've been very good about doing is creating, again, that partnership group through marketing and through portals and through CRMs and all those other different operational systems. We are able to keep, on a 5-year basis, typically we can keep our funds under a 5% cost of capital. So very little money of the fund is actually being spent on the operation of the fund. The majority of the money is being spent on acquiring assets, improving those assets, or whatever it is that they do with, as far as making more money for the investors, increasing NOI.
Yep. With FundOps Partners, we do the entire gamut from what we call a napkin drawing to execution all the way through the full capital raise of the fund. And so when you look at that and comparatively you look at other services that may exist out there, if you have just someone who's going to go out and capital raise for you, what do those kind of guys look for from a fee structure for themselves that may actually be a negative for a fund operator?
So I think we've kind of created an niche at FundOps Partners. So there's two groups out there. There's the fund management people that will basically do the stuff that you don't want to do, but they don't do any capital raising. And then there's a group that does simply capital raising, but they won't do any management. So you'll have to get both of those together in order to create a FundOps Partners relationship. And they can be costly, right? There's definitely a cost to the operational side. But more importantly, from the capital raise side, these guys will take anywhere from 3 to 5% of the capital they do raise, and they typically will want at least 5 to 15% of the actual deal or the fund, that they're raising money for. So it can get quite expensive.
I mean, when we go in, do we tell the operators that, hey, coming in, we need to be a GP, we need a specific share, we got to just, take over a big chunk of what you have, or what do we do instead?
Yeah, so that's a great question. We don't take any GP share as far as an actual share in the investment. So because of compliance reasons, we definitely have to be part of the GP level of the fund, but we never ask for any share value. We don't take any piece of the deal. We don't take any incentive fees. We don't take any success fees. We don't do anything like that to draw away from the profitability of the fund. It does cost money to operate the fund, and we do charge, something to do that for them, but certainly far less than what you would see in either a capital raise group or an operational group.
It's like any fractional service that you might bring in. If you hired an entire team to come in and do what FundOps Partners does, it would probably cost you a pretty penny to be able to do that. I believe that we've structured FundOps Partners with a very fair fee to be able to go through and work and do everything. What do we throw at that? I mean, is it just you and me sitting on the phone and sitting on the stuff, or we have an entire team? What have we put together?
So first, I'd say there would be no bigger compliment to us as FundOps Partners if we did 1 or 2 funds with a group, and then they made enough, they were successful enough to then vertically integrate their own group, and they had learned from us, and they were going out on their own and going to do it themselves. That would not be something I would be upset about. I would be proud of that those people were able to do this themselves. However, that is very expensive, time consuming. The management of all those people and the cost of all those people can get quite high. We've created a team of professionals. Like I said, I've been doing this a long time, you have as well. We have a lot of people from the operational side to the fund management side to the investor relations side to the accounting side that we can bring to the table, and it is just an easier fit and finish for those folks that just don't want to vertically integrate for the cost of the headache.
Yeah. When FundOps Partners comes in, we've got everything set up and we're handling the operations now. Of course, we talked about previously that, we want that transparency. The fund operator, needs to understand what we're doing. They need to be reported to. And sometimes they'll start to shift back into those weeds. How do we work with them, and when we're talking with them, when new investors come in, how do we kind of keep them comfortable with what we're doing and let them continue to focus on their needs?
So there's usually phases that I've seen that we go through, right? Initially they come to us and they're saying, what do I do, what do I do? And then we kind of calm those waters and we get them kind of in a space where they're focusing on one thing at a time and everything's starting to make sense, become clear. And then they become very trusting and they just want us to kind of take care of it because we're doing the things they weren't able to do previously. And then you start having some success. Let's say you're raising a $50 million fund, the first $5 million comes in, and then they feel like, okay, I got this now. And so, like any good bartender, FundOps Partners acts as a counselor as well. Yes, we're doing great. Yes, you're very capable, but aren't you more happy when you're doing asset allocation, or you're doing underwriting, or you're doing the things that you excel at and that you enjoy? We're having this success because before this, you didn't like doing all that stuff and you just didn't get done, or it wasn't successful. Now it is. And so you got to kind of gently kind of stay everybody in their lane. But again, as a fund, this is their baby and their idea and their hope and their dream. So we're just there to guide them. And if they want to take a bigger role, they're welcome to. We're certainly able to teach them and educate them. There's a lot of folks that I deal with that'll say, I love what you're doing, but I want to learn more because I want to, the next fund I want to do ourselves. No offense, Frank. And I say, that's fine. I think it's great. Mm-hmm. And so I will involve them more. And so typically you'll see two things happen. Either one, they really get into it and they're always engaged with you and they're learning more and they're being really competent in their education. And then there's other people who say, oh, this is exactly why I didn't want to do this. I forgot. So we just kind of have to be flexible in how we deal with each operator.
Most operators that get into doing a fund for an asset class is because they love the asset class. They love to buy those properties. They love to fix up those properties. They love to see the growth in that. It's the reason that FundOps Partners is doing what we're doing is because everything to get to that point is what they didn't want to do in the first place. And it's why most people either don't start a fund or fail at a fund. And so we're giving any of those people with that concept the opportunity to still love what they do and grow what they really want.
Yeah, and I think that goes back to what we were discussing about how we are very big advocates of purpose-driven funds, right? There are people out there that want to start a multifamily fund because they had a buddy that did it or they heard about it on some internet show, and so now they want to do it, but there's no real passion behind it. They don't know anything about multifamily. They don't know about locations or underwriting or any of that stuff. They just saw somebody have success at it. They feel like they know that asset class now and they want to do it. But who we typically will work with is there's some kind of underlying passion for, as you mentioned, the asset class or whatever it is, the end result they're driving for. But that's exactly what FundOps is focused on, is those guys that have that passion, because that's what's going to help all of us be successful.
Now there's something that's important and always a tough topic to talk about. If you try to start a fund and you don't truly have a financial wherewithal to be able to start it, even on your own, versus bringing in a partner like FundOps Partners, what's the sticking point there? What is the reason that you need at least some capital to be able to dive into it a little bit further?
So running a fund is not just duct tape and paper clips, right? You've got to have a structure that is solid and a foundation that makes sense. Because although you're not registered as like a Series 7, for example, with the SEC, you are overseen by the SEC. So fund operators, especially the ones we deal with, are working underneath the Reg D 506C statute, which means that they have to file for an exemption, which means they're not regulated by the SEC, but they are overseen by the SEC. And the SEC certainly can come in and regulate them if they don't act properly. So unfortunately, all that stuff has a cost to it. And if you don't know, if you're just trying to piecemeal together as you learn about it, it becomes very costly. One of the things that we offer is, again, that prefab template of partner groups and vendors that we know will treat us fairly price-wise, and you can have that structure in place and feel good about leaning on it and not worrying about whether or not you have to, call your lawyer every 10 minutes and ask him this question or that question.
So, you and I've talked to several potential fund operators, and when we do that, talk about kind of the time and effort that we spend, again, consulting, advising about the fund, and trying to figure out their mindset and where they're at, both on their background as well as their, the financial ability to start a fund.
Yeah, that's important what you mentioned, background, right? So one of the first things we do on the initial process of getting to know each other is we're going to vet out that fund operator. Does he have experience in the asset class? Is he doing it from a point of knowledge or just from a point of greed, right? So that's part of, we want to be partnered with people that we believe in and that we think have a chance and that are going to be doing the honest and right thing by the investors, as well as the entire community of investors, right? So that's the very first thing. But the truth of the matter is there is a cost to creating a fund. There just is. There's a legal cost, there's an operational cost, there's an ongoing management cost. And so, fund operators, especially emerging ones, should be aware that they need to have, some kind of cachet of cash ready to go in order to support this effort until it starts producing for itself. One of the great things about operating a fund is the fund structure allows for these operators to reimburse themselves for the costs, right, that they incur. And one of the things we try to do is keep that as minimal as we can so that the investors in the fund don't get diluted. But also, in order to make sure that this operator who's taken this great risk, right, and put a lot of financial wherewithal on the table, is going to be able to recoup that and then realize his dream by having success with the fund.
And then once that fund is successful and they get into the next one, it's easier for the entire process. But how many operators have we worked with that's like, okay, I now see what FundOps Partners has done for us. I don't want that. What's been some stories about that?
So I would say it's about 70-30, right? 70% say, I'm so glad I hired you guys, and the next fund is definitely yours as well. I don't want anything to do with that mess. And there's 30% of the people that think, okay, I saw what you did, now I think I can do it. And it's a fairly well kind of thing. Let us know if you need us. And we're always in constant contact with those folks. But I think one of the most recent stories is a former fund that we worked at had some investors in it, and some of those investors broke off and started a new fund, and we sat with them for 4 or 6 hours, whatever it was. We went through everything, how we would recommend they structure it, for that asset class, for that equity raise, for those type of investors. And then we sent them on their way, and then 4 or 5 months later they came to us and said, we've made a mess of this. We structured it the wrong way. We've got no kind of equity raise done. We're not getting any traction anywhere. We don't know what we're doing wrong, what we're doing right. So we came in and basically changed the entire structure of the fund, raised the equity amount that they were looking to raise, which again, I've mentioned before, not asking for enough money is as bad as not being able to raise the money, right? So we increased the equity raise, we redesigned the structure of the fund, we re-papered the PPM and the subscription agreements and all that stuff. We put them into a marketing plan, we got them sorted out with all the different operational systems that they needed, and now it's a much smoother and much more digestible fund for the people that they're targeting.
And their passion was the asset.
Yes.
And the underwriting of and acquisition of the asset.
That's right.
And now they're happy.
They are.
And
now they're free to do what they like to do, which is travel to all these different properties, the ones that they own and the ones that they're looking at, to either help get a better handle on management or to find new properties. They enjoy that aspect of it, and that's what we're here for, is to allow them to do what they're best at.
Yep. When we set expectations with a new operator, when we're setting up everything up, we've gone through the fund structure, we do all that, but when in that initial conversation, how many fund operators think that, okay, as soon as I sign FundOps Partners, I'm going to have my first $1 million the next day? What's that process? What's the reality of that? Because you have to temper and set those expectations. So what do we do at launch a fund, or even pre-launch a fund, that kind of lays that groundwork? And then how do we set the expectations for the operator?
So every single fund operator wants $1 million the first day that they hire us, right? But the truth of it is, from the very first time we've talked to them till the time that we finally start launching the equity raise, we have told them several times that you can expect the first dollars to start coming in probably in month 4. It takes almost 2 months just to get the legal paperwork. During that time, we're setting up those systems and processes that you do as the operational side. We're also getting all the legal documents not only created but edited correctly. The structure of the fund is being sometimes juggled a little bit. We're going to tweak it here or tweak it there. So it takes 2 months before we're even going to have the paperwork. But during that time, my team is usually out there calling some of our network, trying to get some interest. Hey, we got a new guy. He's going to be coming out with this assisted living fund or whatever it might be. And we will try to pre-sell it a little bit. Let me know if you're interested, because when we get the docs, I'll send them out to you right away. So all that 2 months, even though they're not getting any equity coming in or investment dollars coming in, there is obviously a lot of behind the scenes work being done. And then from there, we're going to launch the marketing campaign, because now we have the documents. We're going to start going to trade shows. We're going to launch the marketing campaign. We're going to do a call campaign, an email campaign. And 2 months from there is typically when you'll see the first dollars start hitting the account. And I always like to say that it's like a log jam until the first one falls. And then 4 or 5 more will fall into it. Then you'll see a pretty regular cycle. It won't be every week that you're getting checks, but it's pretty much every month you're getting checks, right? And that starts to add up and add up and add up, and hopefully we hit that equity raise for our 12-month time frame.
So when you and the team are talking to potential investors, going through our network, through our list, or even meeting people at trade events, and they say, I like the idea, are they writing a check that day?
No. No, and there's a lot of people, listen, the thing about investments is we are never the first thing on anybody's list. It's happened to me that I call somebody and they say, oh my gosh, I can't believe you called, it's a perfect day, I just got a check for my last investment, I'm looking to do something different, couldn't be better timing. That happens, but it's rare. A lot of people will say, I'm very interested, send me this, send me that, and then you got to follow up with them. I didn't have time, my kid's soccer game, my daughter's birthday, my son's graduation, whatever it is. There's always something more important than what we're talking to them about, but it's about persistence. We just stay in front of them. We're kind and we're considerate and we're definitely polite, but we are definitely tenacious.
So you mentioned before about the pre-calling. So the fund hasn't launched yet. We're still doing on the back end. We're still doing the legal. Number one, is it legal to be able to start pitching that fund, before it's launched? And what benefit does that have?
So you're not pitching the fund,
Right.
right? Because the fund hasn't been structured or legal yet, right?
Mm-hmm.
So there's no pitching the fund. It's pitching the idea of what the fund is interested in investing in.
Right.
So one of the things that we have in our stable is a lot of network contacts and things like that. So I already know that there are some people that are interested in this particular asset class, or they might be interested in a certain geographic area. So if we're going to be representing a fund that only deals in the Southeast, I know not to call guys that only invest in California. So what I'm developing is my target list for who I think is most likely to be interested in the fund that we're representing. So I'm not pitching the fund, I'm pitching the idea and what I know about them and why they might be interested in it.
Probably a good time to talk about the difference of a 506C and a 506B. Sometimes that's the boring stuff, but that's the compliance stuff that is important, because a lot of people will think, I want to go and get money from all my friends and family, my uncle, my aunt, my nephew, all that type of stuff. What is the huge difference between a 506C and a 506B capital raise?
So both of them fall underneath the Reg D statute, right? And one of them is the 506B, as you mentioned, which is, for lack of a better way to describe it, a friends and family fund, right? You're not able to go out into the public. You cannot use social media. You can't use billboards. You can't have commercials. Can't do any of that stuff. It has to be somebody known to you, right? And that's how you need to develop. There's subtle nuances to it, but that's generally what that is. A 506C generally means that we can go to anybody and talk to whomever we like about the fund, about its benefits, and basically ask them to invest, as long as, and again, both in those Reg D variations, the 506B and C, both need to be accredited. Another major difference is on 506B, you could be self-accredited, meaning you just tell me that you're accredited and that's all I need. I can believe you. On a 506C, you need to be third-party verified, and obviously FundOps Partners provides that service so that you can get third-party verified very easily.
That's a key point, because a lot of what we do we've talked about already, but making sure that that accreditation letter comes in, that qualification of that potential investor for all the legal reasons that exists, that's another thing that we do to make sure that they're there. But a big part of what we've set up is a fund operational structure with marketing and all those different aspects that are going to bring in more potential investors. That's why we focus on the 506C side of the investment opportunities, so that we can utilize all of our network, our services, and do those pre-calls to people we don't know and spread it out to people we do. So when we talk about everything that we do with and for our clients, for FundOps Partners, compliance is a huge piece, especially we're dealing with the SEC, we're dealing with legalities, and as you're affectionately known as Mr. No for the No Department, why is that so important to have compliance within a fund, and what are the pieces of that are the most important?
So from a Reg D, 506C or B kind of perspective, there is no way to operate other than a compliant way, right? So one of the advantages of bringing FundOps Partners on is our depth of knowledge and experience dealing with compliance. So I've had several different licenses, you know, with the SEC and FINRA and the NFA and things like that. So I have a deep knowledge and understanding of that. But really, what we've done from an advantageous standpoint for the operator is we have gone out and sought out the correct compliance partners, right? So our attorneys and our compliance review folks in the fund admin side, we've gone out there and sought those people out because not only are they knowledgeable and good at what they do and keep everybody on the up and up, but also they care about us and the investors that are, you know, aligned with us. So a lot of them do things extra above and beyond what a normal attorney would do, and you're not always on the egg timer with our guys, and they just want to see us succeed and remain compliant.
So does compliance go beyond the setup of the day-to-day? Does it go into the assets themselves and what is done with the assets specifically for the investors?
So every aspect of the fund, from the initial structuring and the ongoing administration of the assets, all of that is a compliance issue. And every single phone call to every single potential investor is a compliance issue, right? So one of the things that we do is we are very, like, we will take our staff that's going to be out there making calls, as well as myself and even you, and we will make sure that everybody understands what the asset class, what the offering is, all that kind of thing, and most importantly, how the compliance realm acts and is, you know, part of this particular fund that we're representing. So ongoing, we're having conversations with our teams, reviewing phone calls, and making sure that everybody remains compliant.
Are there some key words that are just do not ever say, like guaranteed?
That's the number one. You can never ever say guaranteed. I always teach our investor relations folks to be very transparent, because that's what a fund offers to the investors: transparency. So they need to be very cognizant of the fact that there is risk, and how does the risk exist in that particular fund for those asset classes that are represented. So each fund that we represent has a different story that needs to be told in a different way, and our folks need to make sure that they stay within those, you know, within those parameters of that particular compliance issue.
So when we're first going out there and trying to mine new investment opportunities, marketing is a huge part of that. What are some of the things to avoid, that we must avoid, that we can't say, or what's the biggest nuance about marketing and you know, whether it be on social media, on paper, on the website, anything like that?
So the biggest thing, I think, is to make sure that your marketing partner has a base knowledge of the compliance side of it, right? We are lucky enough, we've kissed some frogs, but we finally have found a group that we're working with now called the Hubert Group, and they've been very helpful with us, because not only are they experts at marketing and getting lead generation and lead flow and investor interest, but also they have a very deep knowledge of the fund world. So there's not a lot of us trying to teach them what we do and how we do it for them to fail and fail and fail and finally get the right thing, because that puts us all behind. The Hubert Group has been very essential for us, because they already have that base knowledge. So we just tell them the story that we're trying to convey, and then they can make it consumable and also stay compliant. So it's been a great partnership.
You know, that's the key thing when we go to find operational partners. I mean, the Hubert Group is able to, they have the actual fund background themselves, you know, from the founder down to the team, and they equate that into a marketing program, so they know whether we're going after, you know, and marketing to family offices specifically, or about certain asset classes. They've, you know, they have experience across different asset classes as well, which is, you know, that's great. Same thing with our investor portal and our you know, fund administration. They specifically work in a specific set of asset classes and fund operations, that they know what to do and what they're doing. You know, when we talk about marketing or statements that maybe operators that we've worked with before have stated, there's some gotchas in there sometimes, and trying to keep them at bay. You have any stories about what might have been said in the past and how we've kind of worked around that?
Yeah, one of my favorites is I was brought on to a fund that was doing their first fund. They had a lot of experience in real estate, but it was their first fund. And when I met to start coordinating the marketing side of it, once the legal had been discussed, I can remember the first motto that was thrown about was, "Stop letting the IRS steal your money." And that's how I kind of got my nickname, Mr. No, because I said, that's crazy, you can't say that. So not only from a compliance standpoint, but from a marketing standpoint, you've got to meld those two strangers into a cohesive kind of campaign, and that's again, that's what our expertise and our knowledge and our team building has done. You mentioned our portal and our fund admin. We utilize Sponsor Cloud and Syndication Pro, both for our investor portal and our fund admin. Those folks have a deep knowledge of what it takes to remain compliant and to make sure that the investors get the updates and the text information and all the things that go with that. And so having partners like that that have that base knowledge and that work with us from a compliance standpoint is always obviously critical.
When we were vetting out different investor portals and fund administration teams, typically you're either going to find a very expensive one for, they might have all the service you need, but they're going to be very costly. I mean, you see that in SaaS, you see that in all different kind of things. But you're also going to find some that are very good at a piece, but they outsource the other piece. So working with the entire Sponsor Cloud team has been critical for what we're trying to accomplish, because they have the entire investor portal, they have the entire fund administration, they do the K1s, they do all of the processes for you, they waterfall out for the distributions, they manage all that, from the accounting side and the tax side. We work so closely with them. I mean, I would say we're probably on a phone with them at least a couple times a week, having those conversations, talking about the processes and working with them. So it is critical. That also equates to the very beginning of setting the fund up with the legal team, the SEC lawyers that we work with. So being able to work with them to make sure that all of that compliance that we talked about is in those documents, so that when a potential investor looks at it, they're actually reading the compliance side that has to be in there too, so that they get a comfort level that they're not just talking to somebody who's, again, trying to put together a fund just to raise some money. They have a fund operator and a fund structure that we've assisted them setting up that has all that legal protection for the fund as well as the investor.
So anytime you set up a fund and you're creating like team like we've created, right, there's always the danger of kissing the frog, right? You get the bad guy. And when you don't know anything about compliance and you're talking to an attorney and he says all the right things and uses all the jargon, you might think he's perfect. This guy is reasonably priced. He knows what he's talking about, at least as far as I know. And so he's the guy we're going to go with. What we've found in our experience is that guy is not always the right guy, right? There's people that just want to bill you to be that attorney. And there are some people that actually care about the success of the fund and the investors in the fund. And I think that's the legal side that we've kind of found, and the team that we've found to do that for us.
So talk a little bit more about, you mentioned the team and how they're compliant in their discussions. What does that mean for a potential investor, whether it be a retail investor or that high net worth or that family office? How is that compliance good for them?
Well, obviously, the transparency and the honesty of any investor relations specialist is key, right? You want to make sure that the investor has all the knowledge and all of the different aspects of the investment so that they can weigh it from an informed decision and make an informed decision, right? So we work very closely with our team to make sure that they're answering questions that they have knowledge of. But if they don't know, then the very first thing we tell them is to make sure that they'll get back to them and they'll get an answer either directly from the sponsor, from our legal team, or whatever it is, depending on the question, of course. So that, I think, is the key to our investor relations staff, is that they are always trying to inform the client, but inform them from a knowledgeable and honest standpoint.
So when we're talking to potential investors, and again, it's typically either the beginner tier or the higher tier investor that are going to have the questions, and they want to be able to talk to an SEC lawyer on why it was written a certain way. They want to talk to the fund operator about specifics about their knowledge and their ability. Is that all available to an investor as well?
Yeah, of course, 100% transparency. If they want to talk to the sponsor, or they want to talk to the attorneys, or whomever that is involved in the fund and servicing or providing a service for the fund, they always have access to.
So that gives them a comfort level. I mean, we're not just adding value by just doing the day-to-day behind the scenes. we also have the transparency. Again, we keep saying that word transparency, and that's so important. So we have that ability for not just our fund operator partner, but we also have it for the investors as well.
And I would say transparency from a legal standpoint is 99% of the questions that investors ask me about legal questions, I will immediately put them on the phone with our attorneys, because we don't try to hold ourselves out as experts in the legal realm or in the compliance realm. That's why we have attorneys, but we certainly make sure that they have access to those answers and that knowledge.
Yeah, I mean, as advisors, we're going to answer a lot of questions for both the operators as well as the potential investors. But when it comes to the experts that we bring on as partners, whether it be marketing, whether it be the legal side of it, whether it be the tax implications and all of that, that's why we have the team. That's why we have those examples. We're not going to go out and just have them try to figure it out on their own. We want to ease their mind so that they feel very comfortable making that investment and knowing that there is a potential great upside with the opportunity that we've created.
Yeah, and we go back to the systems and processes side, right? So the investor portal, I've used a lot of investor portals. The reason why we have Syndication Pro that works with Sponsor Cloud and they're kind of combined is because not only are they combined from the fund admin side and from the portal side, but through my experience, that portal is very easy to use for the investors, right? They don't have to click a bunch of stuff and find out. If they're trying to find a simple question, they can find it easily in that portal. Whereas a lot of other products, they're not intuitive or user-friendly, so it takes them a lot longer, and they end up calling me saying, well, I'm just trying to find this one thing out. Why can't I find it? Having a good partner takes away all that frustration, because people that invest do not want problems. They want solutions and they want money.
Yep, exactly.
So obviously we know one of the biggest parts of a fund is raising the capital, right, to achieve the goal. So that can give sponsors fits, right? What's the best way that we've found that we can lend consulting to create a process that makes raising capital easier and understandable for the sponsors that we represent?
A lot of this starts at the vetting process when we're still first talking with a potential fund operator and understanding more and more about what they want to do. Someone's not just going to come to us and say, I want to start a fund to build boxes. That's great. Let's talk about that. So we look at the entire aspect. We look at the end result of, okay, who do we know, who's going to invest, and what's happening. That starts at the very beginning. That starts at the first conversation that we have with a potential fund operator. We talk about, okay, what's your knowledge, what's your background, what do we want to set up, and then as we begin to set the structure of the fund up, before we even get to legal, we're looking at the investor at that stage. We're looking at who's going to invest, why they're going to invest, and what kind of returns are their potential that they're going to see. Because if you don't set it up properly from the beginning, then that just makes everyone's job harder in the end. So if we want to be able to get the right investors, and again, I think you mentioned this before, is that when we look at this new asset class fund that we're working with and taking on, we already know out of our entire network, this particular group or these people within those investor groups, they like that asset, or they like that concept, or they like that fee structure, they like that return. So we look at all that and we try to help guide and advise the fund operators toward that from the day that we start talking with them to the whiteboard into legal.
So it's fair to say that when we're developing the relationship with the new operator, we are always looking for the best way to tell their story. Is that fair?
That's very fair. I mean, we talked about the purpose driven, but it's not just about the purpose, because that's a huge part of the story that our team will go out and talk about. But we already know to whom we're going to go after and be able to talk about this investment opportunity. So being able to have that opportunity to set up from day one, that's great, because we're helping structure it so that we can offer success from a capital raise standpoint.
Capital raising can sometimes be very one-dimensional, right? Especially in today's AI age, you just want to kind of set it out there, forget it, and hope that the people call in, right? You want the fish to jump in the boat. But there's a lot more to it, and we've realized that. And so talk a little bit about the other things that we do other than just setting out some kind of social media ads, although that's very important.
So there's an entire set of structure to be able to gain potential investors. Number one, we've been blessed with the fact that we have a network of of individuals that we've worked with over the years that can bring in and like to see new opportunities. But at some point, they're either invested somewhere else in one of our funds currently, or they're just not ready for it, or it's not something that entices them. So we have that marketing effort. We also, we're able to acquire, lists of different individuals that we can bring in and talk to. But we don't just go and buy a list because there's a list out there. We are specifically and strategically looking at, okay, here's a niche of individuals that we want to look at and go after. So we know that they're going to be interested in that opportunity. There's also a lot of different trade events that we as FundOps partners, we attend, we look at, and we want to be able to properly have that discussion with those. So we vet, set appointments, and do all that. We do a lot of legwork to be able to not just show up at a show and hope they come to our table. We want to make sure that we're having those discussions in advance. So it isn't just, here's a big list, go call 10,000 people. Those lists are strategic in what we're trying to accomplish.
I've always, told everybody when we started FundOps Partners that one of the reasons that I partnered with you is that we're very like-minded. We have a very similar idea about what the investor deserves, what the operator deserves, and kind of giving them the best chance for success. But I think one of the biggest things we agree on that is not normal is that you and I both agree that we need to be out there speaking to people face to face. Tell people about there's been times we've gone actually taken a trip to an individual investor just because they've said that they didn't know us. Is that true?
There's a couple different examples. You have a potential investor that actually would come from, a marketing ad. That's awesome. Got somebody that's very, very interested, and enough of an interest to where, we say, okay, let's go out there and visit them in Nowhereville. Doesn't matter where they're at, and be able to see that face to face. One example that we had recently was we were actually at a trade event. We were there for a specific reason to be able to talk to people in, I believe it was Florida. And we had an opportunity that a potential investor that had, some great interest in what we were trying to accomplish and get them into a fund. And they said, I really want to do this, but I want a trust factor. Trust factor is huge. So I don't know you, I don't know the operator, I don't know what's going on. How do I have that trust? Well, you know what? We're a 2-hour drive away. Let's go see you. We'll take a break from what we're doing, and because we have enough people that work these events, let's go see them in person. That makes a world of difference. Trust factor is huge, not just for the clients and what we run for them, but those investors, they don't know us. We can have an investor that says, okay, I want to put some money in, but I haven't talked to the operator. I don't know who they are. You guys are capital raising. You want to get the money in from me, but I want a little bit more. We put that operator on the phone. Again, we put the lawyer on the phone if we need to. Whatever it takes to give them that trust level. We're not just someone who's like this, this dialing for dollars, and we're not an auto dialer. We're not all that kind of stuff. We actually put time, effort into the research, and we'll build that trust level. That's huge.
Yeah, I couldn't agree more. I think it's important to also say that, we talked about it earlier, right? That we're not on the top of everybody's list. So somebody may be interested, but it may take them 2 months to actually make the decision to come into the fund. Even though they've already decided 2 months prior, it'll still take them 2 months just to get through the paperwork or whatever it is because they're busy. Is it fair to say that our staff in our investor relations side is working to nurture those different relationships with these individual investors? Like, they're not just calling them saying, hey, you haven't invested yet, when are you going to invest? Or do they sit there and spend some time and talk to the folks and let people kind of come in as they feel comfortable?
Almost everybody has gotten that repetitive, are you going to do it? 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 Block. So that's not the kind of style that our team, that we've taught them how to do, we've shown them how to do, and that you and I believe in. We want to be able to truly nurture them, understand where they're at, and be able to help them through, get objections taken care of early, hopefully, and then through the entire process. So when we do those calls and we do those follow-ups with them, some of those conversations are about their family. You're building a relationship, and again, you're building that trust factor. A lot of people think you're not going to spend 2 hours on them because, I need you to be on the phone doing, 500 calls in a day. Calls are important. having that pipeline built up. But I truly believe that we have a network that we built because of relationship, not just because of we're going to be just pushing them and nudging them on a regular basis.
Yep. I think it's important that we do that because we want these investors not only to feel comfortable in what they're investing with us this time, but want to think about us the next time, right? The next time we have a different opportunity from the same operator or even a different one, we want to make sure that those folks feel comfortable with us and then have a level of knowledge that we're being fair and transparent with them.
Yeah. I mean, we have, in our network that a chance meeting of a very large pension fund that you just kind of start talking with them about not just what you're doing, but about what they're doing, what their needs are. And you start to learn, and then you have a follow-up conversation. If you just meet somebody, if you and I just met and I just wanted to just start driving my fund down your throat, you're going to, thanks very much, I appreciate meeting you, I got to go meet somebody over here. You nurture that conversation, you build it up to the right point because you're listening to them. You're not just hearing yourself talk.
Mm. And it's not just something we say, it's something we do, right? I mean, it's not just, that is how we are with the people that we interact with. We're not just doing it because that's what produces the most amount of investment dollars, right? It's not a strategy, it's a way of life for us. And I think that's important.
It's a long play because again, they may not invest today in that one opportunity that you're talking to them at the moment, but in a few months, there'll be another opportunity. In a few months, there'll be another opportunity. And that's what I really enjoy about what you and I've set up with FundOps Partners, is that we can, again, work with different fund opportunities that have a purpose to them, and we start to learn who we've talked to, who we've met, who's in our network. And now, as we're looking at a potential new client, our mind's going, hey, I know this, and this person or group likes that. Let's really work this out so we know the potential investor is going to be a part of that.
So throughout, whoever's watching this is probably going to say, this is exactly what I needed to know, right? I needed to know somebody that has this type of ability and this type of team building and all that kind of thing. If somebody is an emerging investment operator or existing that has found themselves in the weeds like we've seen before, what's the best way for them to interact and get a hold of us?
We have a website, FundOpsPartners.com. Definitely take a look at that. They can email us at info@fundopspartners.com. And with that, it's not just, okay, we have a new lead and it's just going to find an email somewhere. We actually reach out and we start having that initial discussion because that is important. We want to find out more about them, what their needs are, and then once we come to that, that mutual understanding of what they're trying to accomplish, the nice thing about, again, you mentioned that we do that personal face-to-face. We will fly out once it's that, that opportunity to take it to the next level, and we would prefer to be able to sit down with them, be on a whiteboard, have those discussions, and help them get that fund structure. Again, that's that trust factor, and it builds it up. So, if they do that initial outreach to, and go to the website, fundopspartners.com, and find out what we're doing and look at all our services, or they just send us an email because they've seen this and they say, tell me more, that's great because we want to build a new relationship and we want to build a trust and show them that, we've got a track record of doing this for a long time and we want to help you.
And I think another thing that's important also is that when somebody does contact us from an operator standpoint, whether existing or emerging, and they want to talk about FundOps Partners with us, they're going to talk to either you or to me.
Correct.
We're not going to pull anybody off the bench. When we go out and have that meet and greet in a physical, face-to-face way, we'll fly out, either you and I or both of us. So they're going to be meeting with the executives of FundOps Partners, not just somebody that works for FundOps.
Yeah, that's important because, again, it all starts with what we're trying to accomplish, as FundOps Partners to be able to support operators. But again, if we just sent out somebody, else to be able to go do it, they may be very, very knowledgeable about what we do. If we've done our job right with our team, they are. But we want to build that trust from the founder level of what we do. And that's the best part that we've been able to see, and build those relationships. We actually have funds that haven't yet started, but we still have this ongoing communication because we've done that with them. If we didn't do that, we just sent them a deck, they'd probably say, great, thank you very much. but we built something with them already. And they may not start today, but if they're ready, they're going to choose us.
Thanks everybody for tuning in, and we really appreciate it. We're anxious to speak to whoever would like to start a fund or maybe take their existing fund to the next level.
If you want to learn more about what FundOps Partners does, what we can do to help you set up a new fund, go to www.fundopspartners.com or shoot us an email at info@fundopspartners.com, and you will get Frank or myself, and we'll be able to talk to you from a co-founder standpoint.
Thanks again.